Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Analysis Update for the 28th of June 2011. Just going to be starting with our CTC strategy in our 4 Majors this morning, starting with the Euro. I'm just looking at the daily. You can see that the CTC is now showing us a red arrow and red candles. However, the CTC on the other side is still to go red. You can see that we're still pretty much in an uptrend, major uptrend. There we go, and price action is pretty much close or nearing the, it's being squeezed. We had a bounce a day ago. Yesterday's candle closed higher. That on a previous bounce. You can see prices fell to trade lower on a number of full week now, where the low of 1600 has been support for this pair. However, the 2 intraday moving average is still above us, even though the institution moving is below. So you can see failed to trade higher on the Asian session above the 20 period moving average. If price continues that way, we're going to see it pull back and then forming a lower swing. That's the situation at the moment now, where we have a lower swing which is lower than that one. So you can see the intermediate trend is to the downside. So intraday we'll possibly see consolidation. You see the 4 hour here, for example, 2 shooting stars at a resistance level, a prior resistance, not price failing to go any higher than that. Oops. Funny enough, that's at the 200 period moving average, the institution moving average on a 4 hour. We've seen a bearish candle in the Asian market session, so you can see straight away that if that continues, we're going to see another swing low being formed, and CTC is red already. However, in the last couple hours we've had a blue arrow and blue bar. However, we've got a down candle. We've got a down candle so far, so shooting star, and a negative bearish. Here's a bearish sentiment here. If you go to our hourly, for example, you can see that it's now trading above the institutional moving average. So is this a pullback in the continuation to the upside? Notice we have a swing higher, but that has been broken in as many hours. So we have the institutional, we have all the moving averages below price on an hourly chart, and you can see that if we don't see a bounce on 14,2600, then what we could be seeing is the start of the pullback, and we could see price retesting the 14,2100 mark very soon, and ultimately there's another slight pause here at the 14,1650 mark, and ultimately all the way back down here to at least the 14,1115 mark for this pair. So as it stands now, we want to see price bouncing on 1426, a fairly profound support at 1426, and a break through that would confirm that we're going to see further downside movement for this pair, and we should be looking at possible targets to the downside, as I mentioned earlier. There we go. So just put a note of it. 14,2600 is our intraday support. Failure to find support at the 14,2600 mark would see price continue to fall to the downside. You can see on our 30 minutes that we're having lower swings, and lower swings to dictate price action, and on this time frame is swinging lower in an uptrend. You can see that we've had higher swings going into this morning, and you can see price is trading on thereabouts at the trend line, intermediate trend line in the time frame. So 1426, will we see support? We've got some news coming out at 7 o'clock for the European German consumer climate figures, and they've just come out now, and they are higher. They were forecasting 5.4, and it came out at 5.7, and the previous figure was 5.4. So they're expecting a lower figure, and it's come out higher. than the previous figure, so that's showing a bit of positive sentiment on the consumer side, which is great. Today, all day, we have also got the German prelim CPI month-on-month figures. So the previous figure was 0.010%, and they're expecting a forecast of 0.01%, which is good. So we get a higher figure than that, then obviously it'll be great for the euro. Next up is the US dollar against Swiss franc. The sterling against the US dollar. Apologies for that. Let's have a look and see what's happening on the major time frame. You can see that price has been in an uptrend, and recently we've seen that uptrend being breached to the downside. There we go. You can see on the intermediate trend is negative. Lower swings as we've broken through the major support trend line, came to test the underside, fell to find support above that area, and subsequently fell further back to the downside. A lot of negativity creeping in. What it's done now is it's taken us way below the 1600 support area, major support. There we go. And testing the underside. If it fails to break above 1600, then consider further shorting, because what it's done now is it's broken through, pulled back, and then continuation. And you'll notice that the trend direction for this pair on the daily time frame is looking very negative at the moment. So just be aware of that. You can see the trend direction is quite steep, confirming the negative push is quite steep. And if we take the projection from the start of this downtrend, the breakout, the pullback, the 100% fib is just below the 5900 mark. 161.8 is just above 156600 to start with, and 261.8 fib will take us way back just below the previous swing. So a lot of movement to the downside. If you don't see price rallying and breaking higher than 1600, or ideally above the institutional moving average, then we're just seeing a classic breakout, a pullback, and then we're going to see a continuation to the downside. Intraday, you should see the consolidation and the failure. If you look at the Audi, for example, lower swings going into this squeeze. Notice I mentioned that 1600 was a strong support in the past. Notice how price, as it got closer to this, started to consolidate. Then we saw a price movement in between the two pairs, and as that was occurring, you'll notice that the swings got lower as price moved onwards. And so going into today's trading, you can see that price is now trading well below this. Last night Asian market trading has seen a swing low being formed on the pair, and you can see that there is a support area in this area here, a very messy support, but it's now trading below the 1600, which is a prior support, a very strong support area, and as long as it's trading below 1600, then obviously we're going to see further downside movement for this pair. Notice CDC is still in our favor on an hourly, so you can understand that even on smaller time frames, even though there's consolidation, you can see on an hour, half an hour chart, 30-minute chart, you can see price has just been going sideways. Even though it's been consolidating, it's still putting in lower highs, and as long as it's doing that, then it's definitely dictating or indicating that the market sentiment is still negative for this pair. We've had a slight pause, support and resistance below that, but as long as it's trading below the 1600, then it's still looking altogether ultimately very bearish. CTC is still in our favor by a couple days, a couple hours where we had the CTC showing blue, but it wasn't trading above, or price wasn't trading above a major support area, hence that was a a false signal, buying signal. So look for shorting opportunities today, guys, or until further notice for the sterling. Next up is the US dollar against Swiss franc. Let's have a look at the daily time frame for this pair. We know ultimately this pair is a negative trend. The US dollar is trading at an all-time low against Swiss franc. And what we're seeing is the past couple of weeks we've seen a support level being forged, and we saw a US dollar rally, but that rally only went as far as a previous support and resistance level in the past. Previous support, new resistance at the 8550 mark, and we've seen price push lower since then. 20 period moving out and acting as a great support resistance area for this pair. And yesterday we saw price trading below that previous support, however closing higher. You want to see price closing below that area. So on a daily, if we can see a daily close, a bearish close, will definitely signal further shorting opportunities for this pair. CTC is still in our favor for that to occur. However, the longer it takes to break below this price support area, then there's a good likelihood we could see a bounce occurring. So just be aware of that. Rather wait for a definite confirmation break lower. Ideally, wait for a daily candle to close lower, especially when around support and resistance. The last thing you want to do is be faked into trades. I guarantee people tried to go short yesterday because price closed lower. However, because it wasn't a definite break, we saw consolidation, and then during the Asian market, the US session, pull everybody into the trade, and then move to the upside. So, got to see a bearish candle lower, bearish, nice strong down candle will confirm that the institutions are still finding further reasons to sell the US dollar against Swiss franc, and we could look for further downside movement for this pair intraday. So let's have a look and see what the price was. The low of this candle here is at 8335. That's going to be our intraday support area. So let's mark it in 8335. There we go. That's our intraday support area, and price needs to be trading below that, closing below that to give us indication of further downside movement. Notice how we're being squeezed now. Price is still falling. Notice that. Price is still falling. We're still seeing lower highs, confirming downtrend. The highs are getting lower than the previous ones, dictating price movement is low, and now we're being squeezed between a point where I mentioned that there was a strong support level at 8335, and we're getting a squeeze now. CTC is in our favor. If this continues, then you're going to see a big push down, and we're going to see one of these candles, at least one of those, pushing down, confirming that the drive is still low, and by doing so we could see for further downside movement on this pair. Failure to see a close lower than 8335, a definite, so then all we're going to see is this occurring. Fake out, triggering short orders to the downside, only for it to pull back and to take you out the market. So rather wait for confirmation, definite buy and sell. Ideally, you want to be trading above all this noise here. There's far too much noise going into this, so it'd be far better to get rid of all the noise. So that's what I do. Just box it, get a nice big box, and say, listen, yeah, I'm not interested in trading this until such time as price is traded above that. So if it gets above all this noise here at 839, then there's a definitely possibility of further upside movement, because by then it'll forge a strong support area at this bottom on a very strong support line major. Then we could see potential for further upside movement. Otherwise, all we're going to see is consolidating, and then pushing lower because sentiment is still negative. Last pair of the day is the US dollar against the Japanese yen. Let's have a look at that on a daily time frame. So you can clearly see that we've had some support at the 80 mark. So I'll put that in so you guys can see it. Very strong support. We've had 2 days where price traded below that, 3 days, apologies, where price traded below that level, and that was just, I think, before the earthquake and tsunami, and then we had the intervention, which failed to really do much, and we've seen price pull back since then. But you'll notice that as price has been going sideways, you notice that the highs have got lower, dictating that we are still in a negative consolidation band. Okay, if this was a positive consolidation band, then we'll see higher highs, and that was not been the case, because you'll see that the moving averages are all still pointing lower. The institutional moving average is still pointing lower, and our two smaller time frame moving averages are in play with price and very inconsistent, but price has still failed to trade lower than 80. So we know that there's a strong support area here, and just recently, since the start of this of June, we've seen price reverting back to this level on a number of occasions. So we know that this is quite a strong one. Otherwise, we'd have seen price break lower. We want to see if prices, if the US dollar is still to fall against the Japanese yen, then we want to definitely see a bearish candle break, a strong bearish candle break lower, not an indecisive one. Got to be a definite bearish candle engulfing a lot of this range over here to confirm that the US dollar is still seeing a lot of weakness against the yen. Until such time as that occurs, then all we're going to see is this continuation band, consolidation band to continue. You can see it'll keep on ranging between either 81.50 and the 80. And you'll notice over the past couple of days, the US dollar has been able to rally slightly against this pair, and in doing so, posting higher. The lows have been higher, swinging higher. However, it failed to break above a previous swing low in this consolidation band. In doing so, it's come back against the 50-period moving average. Yesterday, you can see that the US dollar rallied, but failed to break higher than a previous high. And Asian market trading and European session open this morning at 7 o'clock has seen price pull back. Will it form a bearish harami, i.e. uptrend at a resistance level, a full engulfing candle? Half of the trading width of this candle will confirm that we're now seeing a resistance. A bearish harami means it's top heavy, pregnant lady apparently, don't know where they got that from, and it's meant to topple price over. Will that occur? Well, that remains to be seen. If price cannot trade higher than this previous high here at 1895, then what we could see is a bearish harami being formed candle-wise on a slight upturn, and we could see price reverting to the downside, and we could see the 80 mark being retempted in the next couple of days or weeks. So just put that down. Your resistance level for this pair to the upside is roughly the previous highs here at the 80, 90, 50 mark. So let's go to our hourly chart, for example. We know that is the resistance level. The price has to be trading above that. Failure to trade above that is just going to confirm that we're seeing a resistance level on a prior resistance level. Here we saw on our daily in play, and as long as it's doing that, then we're not going to see further highs. And if that's the case, then what we're going to see is a potential for further downside movement in the next couple of days, and a reattempt of either the 20-period moving average here at roughly the 80-60 mark, or the 85.5 mark to be more exact, before we see further continuation, because it's still been this uptrend, this intermediate uptrend. So it'll be very interesting to see what happens. So we could say that if price is trading below the 85.5 mark, then we're definitely going to see the 80 mark being reattempted, because the negativity or the intervention, not the intervention, the institutional where the money is definitely to the downside. By then it'll be trading below the major, it's trading below the institutional moving average now on a 4-hour time frame. You can see that it's broken through it, and we've seen the Asian market failing to trade higher. It'll just confirm that we're seeing a potential here for further resistance, and we could see price reverting to the downside on this. So just be aware. Just make a note of it. If it's not trading higher, then at least it's got to be trading above 18.95 to be considered bullish. And as long as it's not trading above 18.95, then we're looking at further consolidation. And if it's going to consolidate, then there's likelihood of further, a potential likelihood of another retest of the 80 mark. It's got to be trading above 18.95 to be considered still bullish By doing so, it'll be trading above a previous resistance level, major resistance level that we see on our daily. And if it can't break above that, then obviously you will know that the market sentiment is still negative for this pair, and we should be looking for downside movement. That's it, guys. Hope you have a fantastic trading day. Make sure you follow the rules of the CTC. Make sure that your money management also coincides with that, your trading style. Please do not trade with a adverse risk reward. It's always important. It's one thing to have a great trade setup and to have the best strategy in the world, but if you don't follow it, you don't back that up with the right money management, then you're never going to be able to make any money in the market. Other than that, enjoy the weather. It's been great, fantastic weather outside here in Wales today. Nikki and I are definitely going to spend some time with Connor in the sun, make the most of it. But most importantly, if you are trading, make sure you follow the rules, make sure you keep your trading simple, and most importantly, trade serenely.